Hello and welcome to Emmy Trading Academy. Today we are going to be talking about USDT futures or perpetual swaps, and this is part 1 of the tutorial. Let's dive into it, into the outline. Today we'll talk about what is futures trading and how it's different from spot trading. We'll talk about margin and leverage. We'll talk about how to register fund your wallets and transfer funds to your futures account. We'll talk about how to long, short, place stop loss and take profit. We'll talk about how to follow signals, how to follow our emeCrypto trading signals. We'll talk about fundamental, technical, and psychological analysis. We'll talk about a winning strategy for beginners and how to grow as a futures trader. Let's dive into it. Alright, so I'm not going to spend a lot of time talking about what futures trading is. I'm sure you're not interested in all those definitions. I'm going to recommend some text at the end of this video and some books for you to read. But we won't get into the meat of it, okay? What is really important to you as a trader right now? What do you need to get started? How is futures trading different from spot trading? If you're watching this video, I assume that you've done some trading, on an exchange. You've bought or sold Bitcoin or any other altcoin or cryptocurrency. But what makes futures different, all right, is that instead of saying buy and sell, we say long and short, all right? But buy means long and sell means short. So when I'm using these terms, it's important that you understand. So when I say go long, I mean buy, all right? When I say go short or short Bitcoin, I mean sell, all right? That's the way it works, all right? And then you can trade with up to 100x leverage in the futures market. You can't do that with spot, all right? That means if you have $1,000, all right, you can deposit that as margin and trade up to $100,000 worth of whatever assets you want to trade. And if you're trading $100,000 and you make 10%, that's 1 million naira, all right? But if you're trading with $1,000 and you make 10%, that's just $10,000, all right? Now, let's go over to the practical of it, all right? Once you've registered on an exchange, these are two places where I really love to trade. I love to trade on OKX, so you can just use my referral link bit.ly/OKX or Binance. These are two places where I really love to trade futures. And once you've registered and then you need to send some USDT to your account. I'm not going to teach you how to do that. I assume that you already know how to do that, all right? I just want to make this video very practical and very straightforward. We're going to look into how to long and short on the futures market, all right? So for the sake of this video, we're using Binance, all right? In another tutorial, we'll use another exchange, all right? So once you've logged into your Binance account and you funded your account, you can just go to derivatives. Now note that futures is a type of derivatives. Derivative includes futures and options, all right? And under futures you have coin margin swap. That's why you have it here, coin margin swap, and USDT margin swap, or USDT futures, or coin margin futures and USDT futures, all right? The difference is that in the USDT margin futures, you are using USDT as margin, all right? So in order for you to trade, you need to deposit USDT and use USDT to trade, right? But in the coin margin fusion, you can deposit BTC and use BTC as your margin. I'm going to explain what margin means very soon, so it becomes very clear to you, all right? So let's go into the USDT margin swap, all right? This is what it looks like. It looks very interesting. If you traded before, you know what this means. You have your market here, you have your order book. I've customized this. I've removed the depth chart, right? You have this bar for looking at your position and orders. You can see I don't have any order right now, and you can see that my balance here is 0 USDT, all right? And remember, this is USDT margin swap. We are actually talking about USDT perpetual futures or USDT um USDT perpetual futures or USDT perpetual swaps or USDT futures. All right. And remember, I said earlier that we have two types of futures. We have coin margin futures, which is this one over here, and USDT margin futures. All right. Now there's another classification. Um, let's not go into that. All right. Let's just narrow our focus on USDT futures. I don't want to confuse you. All right. Now, what the first thing we want to do is I want to transfer some assets into our futures account. All right. So you can come here, click this button, transfer from your spot wallet to a USDT wallet. You can see I have 624 USDT right now, so I'm going to transfer all of it to my futures account. So you can also transfer from your USDT futures to your spot wallet. All right. So now I have some balance. I have 624 USDT right here, and I can use that to deposit as margin for my trading. All right. So we've talked about how to transfer to your USDT account. Now let's talk about how to long and how to short. All right. In your normal spot market, let's go over to the Binance.com website to look at some differences between the spot. If you go to trade and then you go to advanced, right, you're going to see, oh, they've even made it very clear right here: buy or long, sell or short. So it's easy peasy. All right. So right now we're going to short Bitcoin. The price of Bitcoin right now is 700. It's 10,717. So we're going to short Bitcoin as let's say we want to short Bitcoin, on sell Bitcoin when it's 10,720, 1 unit of Bitcoin. One rule that I usually emphasize when I'm teaching my students is always use stop loss, always use take profit, always plan your trades before you make them. All right. So in this case now, I want us to be very practical. Let's plan our trades. All right. Now, what you want to do, what I advise my students to do is to only use 1 to 3% of their account. All right. So let's look at to only risk 1 to 3% of their account. So let's look at what we got here. We got 624 multiplied by 0.03 plus 624. Pardon. Okay, so 3% of 624 is about 18. All right, so that's our target. So we want our margin for every trade we are placing to not be greater than 18, because as a rule, one of the rules that I'm going to teach you when you're trading futures or when you're trading with leverages, don't use more than 3% of your account. Don't use more than 3% of your account. All right, you need to have sufficient margin, and you need to use a very small margin so that you can absorb any risk. All right. So we're going to let's say we are trading 1 BTC. If we are trading 1 BTC, it's going to cost us 542.41 USDT. Right now, that is not a risk. That is way beyond what we calculated. We calculated 18. So let's try 0.1. So 54 USDT. That's still too much. That's still too much. Let's try 0.05. 27 USDT. That's bearable. Remember, we calculated 624 multiplied by 0.03. 18. So once 18, 0.04, 0.03. So we want something that's going to give us in margin. This costs, this is what it will cost you to place the trade. It's not like they're going to deduct, it's not like they're going to take the money away. No, it's just like a collateral. You need to be able to deposit it, all right, before you can make a trade. More about margin, I'll talk more about margin later. So let's reduce this to 0, 0.04, 0.03, okay, 0.0435. All right, so now we're good. Then the next thing we need to do, okay, we want to short Bitcoin at 10,720, right? 10,720. All right, so we're gonna put our stop loss above 10,720. Let's put that 10,800. That means that, okay, let me just hide some of these indicators so I can show you the chart. I'll just use the lines to indicate areas where I'm buying and selling. I use these lines to indicate areas of support and resistance. We're going to talk about support and resistance very soon. All right, I just want to give you a practical insight of how to buy or sell, how to long or how to short. So we want to sell at 10,007. I want to sell here. All right, so if we are selling, that means our targets will be somewhere here. So if the price is going down, we're making money, but if the price is going up, we're losing money. All right, so let's put our take profit. This is just an example. Let's put our take profit as 10,600. Our take profit will now be 10,600. And then our stop loss, we can put it at 10,700. Well, no, 10,800, right? So if it gets to 10,800, we are going to exit this trade at a loss. Now, what you can do when you are placing your trade, now, placing a trade is very easy, right? You just come and put some values and then you click buy and sell, all right, or whatever. But before you place your trade, okay, I think I made a mistake. It's 10,800. Yeah. Before you place your trade, you need to understand your risk. You need to know what you're getting into. All right. This is very important. All right, so that you know what you're doing. So our entry price is 10,720. Our exit price, let's say the trade goes in our favor, our exit price is going to be 10,600, and we are trading 0.035 etc. So our profit is, okay, short, and we're shorting. Our profit is just 4 USDT. All right, and that's 22.9% of our margin. 22.9% of let's do the calculation. You know, our deposit is 18. The cost of this trade, or our margin, is 18.95. Let's about 0.663. Yeah, so if the price gets to 10,600, that means we've made 23% of 4 USDT. All right, so now that you have an understanding of what your profit is, let's calculate the risk for this particular trade. So the risk is just -2 USDT, but our reward is our profit is 4.2 USDT. So you need to know all these things before you place a trade. You know, you need to appreciate your risk and reward. All right, you know how much you're risking, and you need to accept this risk, you know. Now let's click sell short. All right, now we use the limit order, so the order is not going to fill immediately. It's going to come here and appear, and if the price eventually gets to 720, the order will be filled. All right, now let's put a long position using market order. All right, let's trade. Now we know that 0.0335 is a good size, a good position size, because we're only using 3% of our account to trade. Let's give it a long. Let's long it. Let's buy it. So when we click on buy, the order goes through immediately, and you can see your entry price, you can see your market price, you can see the size of the trade, right? And then you can see your margin, which is 18.75. Okay dokie. So let us proceed. Now you know how to place a trade. We've talked about how to short or how to long, but what's wrong here? Something is wrong with this trade. What is wrong is that I did not set a take profit or stop loss before putting the trade. So Binance is really cool. They have this feature that allows you to set your stop profit or the take profit or stop loss. All right, you can calculate that with your calculator. You need to have a mental picture of how much you're willing to risk per trade and how much you're willing to or how much you want to make per trade. So for this example, we're just going to put 10,800 as our take profits. 10,800 looks good. Let's test it 10,850, and let's put our risk as 10,600. Right. So let's refresh. Great. Oh, still refreshing. So if you look carefully, you see that we did it, guys. We did it. You can see this is our take profit. If price gets to 10,850, we make 4 USDT. If price gets to 10,600, we make minus 3.9 USDT. So it's good that you set your stop profit and your take profits and your stop loss, you know, because the trade can the market is very volatile, and if you don't set a stop loss, for example, you're long now, what happens if the price crashes down to like $5,000? Your accounts could your funds could get stuck for a very long time if you don't set stop loss, because you will be scared to close the trade because you've lost so much amount of money, which is unrealized. And if you're not careful, you could get liquidated, because what happens now is that we have a margin of just 18.5, but if this trade keeps going against us, um, we um, will need a larger amount of capital in order to be able to maintain the trade, right? It's called maintenance margin. All right. Okay, so let's go over. So how to long or short. All right, very simple. You put the price you want to um long or short. You put the size of what you want to long or short, right? You calculate your stop profit or your and your you, st you calculate your stop loss and your take profit, sorry, and then you click buy or sell. Right, let me just cancel the previous sell order I did. I'm going to leave this trade and see if I can make some profit. Okay, so let's go over to the next one, how to follow signals. Now, as a student of the emeCrypto Academy, I'm going to be giving you signals. I'll add you to our signal group, uh, and you need to know how to follow signals. All right, let me give you an example. Let's say I drop a signal that says long F turn, right? Entry is okay, let me spy what a good entry would be. Entry would be okay, let's say entry 353, entry 353 dollars to 357. I usually give you a range because I know that the market is very volatile. As it's okay, take profits TP is a long take profit will be above. Let's see, take profit to be 400 to 450. Stop loss below 403 40 to 340. All right. So let's say I give you this signal. All right. All you see, the work is already done for you. All right. All you just need to do is go to your the Binance 353, and then the work that you have to do is to calculate your position size, because I will give you the signal, but you have to know what your position size is. If I'm trading with a $10,000 account, I won't be trading a very small position size like what I just did in our previous example. I won't be trading with 0.035. I'll be trading with like 1 BTC or 2 BTC or whatever. All right. So the amount of capital you have is going to determine your position size. And remember my advice. My advice is only use 3% of your capital. Right. If you want to stay in this game long enough, you have to know that you cannot be greedy. All right. Of course, the larger your risk, the larger amount of money you're putting on the table, the larger your reward. But you have to be careful. You don't want to use a large excuse me, position size. All right. So you would calculate your position size, and then of course you like you would have to accept your risk, and you have to know when to get out of the trade. All right. If you're paying attention to my signal group, I usually tell you exactly what I'm doing when I'm doing it. Sometimes I give a signal, and then the market acts in a way that, okay, I feel is not going according to my plan, and I feel that, oh, something is going to happen. Sometimes I might say, okay, I'm getting out of this trade early. I'm not waiting for the trade to eat my take profit. Right. So I just try to explain what I'm doing so that you not just follow and just copy paste my trades. You understand my thought process. You understand what I'm doing it and what I'm doing and why I'm doing it. All right. So that you can be independent on your own. All right. So your position size will be determined by the capital, how much you have in your trading account, right? And then you need to accept your risk and, of course, take profit, which is your reward. All right, now let's go to the next one, margin. All right, margin is simply a portion of your funds that your forex broker, or in this case your cryptocurrency exchange, sets aside from your account balance to keep your trade open and to ensure that you can cover the potential loss of your trade. All right, in this instance, margin is um, Oh, something's wrong. In this instant, our margin is 18.75. All right, that's our margin. And mm, yeah, I think that's all we need to say about that for now. Leverage. Leverage is an investment strategy of using borrowed money, especially the use of various financial instruments or borrowed capital, to increase the potential return of an investment. All right. The default leverage on Binance is 20%, but you can decrease it or increase it. And I noticed that there is actually quite an interesting relationship between leverage and margin when you're trading on Binance. All right, so your default leverage is 20%, but you can increase it or decrease it. All right, you can increase it or decrease it. All right, now also important is to know how I come about these signals. All right, I use fundamental and technical analysis to generate my signals. All right, technical analysis seeks to predict price movement by examining past data, meaning price and volume. All right, now if you look at this chart, there are some things that were there. A very popular technical analysis tool is moving averages. Right, we have the I use the 50 moving average and the 200 moving average, exponential moving average, the EMA. I don't use moving average. I use the moving average. I use the exponential moving average. So this is a tool that you can use to understand the trend of the markets. We're going to talk more about technical analysis later on, but there are many tools for technical analysis. Another important tool is use support and resistance. You can't be a trader and not know about support and resistance, and you use these lines to draw support and resistance. Right. So in another video, I'm going to go into more details about what support and resistance means. But for now, let's just proceed. So you need to understand what fundamental analysis and technical analysis is. Like I said before, technical analysis is when you're using past historical, when you're using historical data to predict what's going to happen in the market. In fundamental analysis, you're looking at um, cryptocurrencies that are you want to try to gauge the value of a cryptocurrency. All right, and you want to know, okay, is it undervalued right now or overvalued? All right, when a cryptocurrency is undervalued, you want to be buying it. When a cryptocurrency is overvalued, you want to be selling it. All right, one of the most famous um, investors that uses fundamental analysis is Warren Buffett, and you would have heard him. He will say buy when people are afraid and sell when people are greedy, right? So if you just look at the cryptocurrency market right now, I think this is really too important to ignore. Look at EOS. EOS is one of the best projects in the cryptocurrency space. All right, and you can see that it's number 14. The market cap has just been there, just been black, right? Since it was created, and I feel that this coin is really undervalued, right? Compared to other shit coins that are just I don't even know what Bitcoin SV is doing in top 10, right? But some coins they are just for speculative purposes. They don't have real value, but there's some cryptocurrencies that have real value, and you can see them really low, right, in the cryptocurrency ranking. So it's your job as a trader, if that's what you wish, if that's what you like, if that's what you've come to enjoy, to use fundamental analysis to look at the value of a token to try to predict its future price, right? So, and then there's another important type of analysis called self-analysis or trading psychology. Now, 80% of your success or failure as a trader will be as a result of your ability to understand yourself, all right? Your emotion and your mental state, right? That's what's going to dictate your success or failure, right? Trading psychology represents various aspects of an individual's character and behavior that inflects their trading actions. All right. And important themes we'll discuss in trading psychology are discipline, risk, fear, greed, hope, and regret. If you're not a disciplined trader, you're bound to lose money. All right. You need to understand risk. You need to embrace your fears, right? Because as a trader, there are there are four fundamental fears that you will have as a trader. You have fear of missing out, fear of losing money, um, fear of not taking profits, you know, just general fear, uncertainty, and doubts. You need to accept these fears because these are things that are going to happen as a trader. I guarantee you that you will lose money. So if you don't lose money, it means I'm fake, right? You're going to lose money, right? But you need to know how to manage your risk, all right? You need to know how to manage your risk, right? And then greed. As a trader, also, I guarantee you that you're going to make money. No, anybody can make money from the financial market. It doesn't take any special skill or whatever, right? Whenever you place a trade, there are two things that can happen. It's either you win or you lose, right? And you can be lucky, you can win. How do you make consistent profit? And how do you check your greed to make sure that you don't start over trading? Right, those are things that you need to understand, and until you really understand self-analysis, you won't succeed as a trader. I've seen two people that were using the same signals. One was making money, the other was losing, and the one who was losing lacked discipline, lacked the ability to manage risk, was trading with fear, was greedy, was trading with hope, and of course it ended in regret. So you need to understand yourself and your trading psychology before you can succeed as a trader. Okay, now let me give you a simple winning strategy, very simple winning strategy for beginners. All right, now this is very simple trend following strategies to um use the 50 and 200 EMA to determine the trend of a market, and then trade in the direction of the trade. Trade in the direction of the trend. So if the market is trending upwards, you want to be buying. If the market is trending downwards, you want to be selling. Trade in the direction of the trend and buy at support levels and sell at resistance levels. Alright, so this is a very simple winning strategy for beginners. I mentioned earlier that two important trading indicators are your moving averages, your 50 moving average and your 200 moving average. This white line here, this thick one is the 50 moving average. This thin one is the 200 moving average. When we talk about I'm in profit, guys. I've made 23 cents just during this tutorial. If I had entered with a larger amount, I could have made more. This is interesting. All right, so back to our tutorial. Sorry that I digressed. So yeah, so these are moving averages. You can use it to determine the trend of the market right now. When the price is below the 50 and 200 moving average, you can say that we're in a downtrend. And when the price is above the 50 and 200 moving average, you can say that we're in an uptrend. Right now, this market is not actually in an uptrend or in a downtrend. It's not clear. You can see that the price is right in the middle of the 50 and 200 moving averages. Um, let's look. I want to look for a trending market. If we which crypto, okay, yeah. I remember some trending markets. Let's look at CRV. CRV. I want you to tell me if this market is trending upward or downward. Okay, let's use the 1 hour time frame. You can see obviously this market is trending downward. Alright, you can see the price has been falling. Like if you bought this coin, like, oh my god, accept my condolences, my heartfelt condolences. Look at this, the price has been falling drastically. Right, and you can see that you can see the way your 50 MA hawks the price. Right, you can see, so when the price is below the 50 MA, it tells you that this is obviously a downtrend, and what you want to be looking for is opportunities to sell. So at this point, all right, what's happening? At this point, you should not be buying these cryptocurrencies at this point. You should not, because is this indicator is telling you that this currency is this cryptocurrency is in a downward trend, and generally speaking, you want to be trading in the direction of your trend, right? Think of it like a river, right? You can see if a river is flowing downhill, right? You don't want to be swimming up, right? You just want to be going with the flow, right? Because swimming up is going to be really difficult, because you'll be swimming against the tide, all right? And that's what happened to people that were buying here. People that were buying this cryptocurrency at these prices, they were just getting wrecked because the price was just falling down. Right? When it got to this point, some people, I may have been tempted to buy, because you can see that the trend was not changing. The price was no longer falling. The price was, they call this in a range. The price was now ranging. But the bearish tendency continued, and then the price dropped and dropped. All right. So we have downward trend. This is a downward trend. Right. Let's look at an example. So what am I trying to say here? All right. In a downward trend like this, you want to be looking for opportunities to sell. All right. So if I was trading this, and this is got to this point, got to this point where the market was ranging, I'll still be looking for opportunities to sell, because my exponential moving average will be above the price. You can see the 200 moving average sitting above the price. Let me enlarge it so that you can have a better view. All right, even now I'll still be looking for opportunities to sell, because the price is still below the 200 moving average. And now that I understand the trend of the market, another thing I can do is to use the support and resistance to actually give me my area of value. All right, area of value are areas where the market usually reacts. All right, you can notice that this point where this line is an important area of value, right? Because you can see that whenever the market reached here, it stops. Whenever I got here, stop again, stop again, stop here, stop here, stop here, stop here. So this is actually a very significant area of value. I can predict that when the price is coming back, when it gets here, this that was once form of support is going to become point of resistance, because everybody will be looking at this point. All right, this is an area of value. All right, so this is another area of value, because when price got here, it was this line was acting as a resistance, right? So you want to be selling at this point. These are the points that if I was trading market, I'll be selling at this point, right? And then price broke support and rallied down. All right, so a simple trading strategy for beginners to use the 50 and 200 EMAs to determine the trend of the market, trade in direction of trend, buy at support levels, sell at resistance levels. So you can remember this by saying TAE, TAE, where T means trend. You want to identify the trend of a market. Then you want to get into an area of value. You determine the area of value by using support and resistance. And you need an entry trigger. Alright. We're not going to talk about entry triggers today. Alright. We're just going to be talking about the trend and area of value. You can use your support and resistance as entry triggers. You want to be selling at this point, areas of support, and you want to be buying at this point. Now let's come down a little. Now if you look at this, you notice that price has formed another support and resistance. Let's draw a support line. You can see this point is a point of, when it got here, it was a point of support. The price gave me a bounce, price gave me a bounce, price gave me, and then broke. Okay, then when it came a point of resistance. So this is actually a significant area of value, but I will do nothing here because what is the trend? The trend is a downward trend. I want to be looking for opportunities to sell. So come and draw another chart here. So if I were trading this market, I would be selling here. I will sell at 1.42. All right. So that's all. So that is simple strategy for beginners. Use your 50 and 200 EMA to determine the trend of the market, trading in the direction of the trend, buy at support levels, and sell at resistance levels. All right. Buy at support levels if the market is in an uptrend, and sell at resistance level if the market is in a downtrend. In a downtrend, you don't want to be buying, right? And in an uptrend, you don't want to be selling. You want to be buying. So how do you grow as a trader? All right. So this particular trading strategy is called, I call it scalping the trend. All right. It's for beginners. I call it scalping the trend. We're going to talk about this more in another video. Right now, let's talk about how to grow as a trader. If you want to grow as a trader, you have to trade, because obviously you need to trade. You need to communicate in the community and share what you learn, and share what you learn and learn from others. And you need to read books and learn, right? And watch educational videos like this, and then you need to practice what you learn, right? There was a particular time in my life I read 3 books in a week about trading, and I discovered that all those 3 books, they were just talking about the same thing, and I had one problem. I was not using stop loss. So after reading 3 books, I was still not using stop loss. And if I could summarize what the books were talking about in like 5 sentences, the first sentence would be use stop loss for all 3 books. At that point, I had to stop reading and focus entirely on how do I get myself to use stop loss. All right. So in as much as you're trading and communicating, reading, you want to be practicing good habits. All right. So talking about good habits, let me just share some warnings
I should paint this in red because it's like you need to get the feeling. This is like danger. Warning, guys, warning. Use stop loss. You know, if you want to succeed as a trader, it's non-negotiable. All right, you need to use stop loss. There's no way you can go around this. Use stop loss. I'm going to say it again, just for the sake of emphasis. Use stop loss. I know someone listening to this is going to stop this video and is going to start trading and is going to trade without stop loss. Right? I want to tell you, you're going to get wrecked if you trade without stop loss. It's a guarantee. Stop loss is what's going to keep you in the game, preserve your capital. All right. Number 2, never average into your losses. All right. If you're in a losing trade, don't feel that okay, let me give it more position, more margin in order to drag the price down. Never do that. Always cut your losses. Let your winners run. What this means is that if you're in a winning trade, you don't want to be in a hurry to close the trade. Right? You want to be in a hurry to close a losing trade, not a winning trade. All right? So instead of closing this trade now, I can set a stop profit to ensure that I lock in some of the value and hope that the trade keeps going up. If it goes down, I lose nothing. Right? What I'm risking is just my profit. Only use 1 to 3% of your account per trade. Only risk 1 to 3% of your account per trade. Always plan your trades before you enter. Always follow your plan, and remember, use stop loss. Thank you very much for watching this video. This is the end of part 1. In part 2, we'll go into more details of the things that we discussed in this video. My name is Toju Kaka. Thank you very much for watching.